Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end with marginal losses after a range-bound session. Financial stocks lead the decline once again. Mid-cap index manages to end in the green. India and the United States likely to sign an interim trade deal within the next 2 days to avoid additional 26% tariff from the 9th of July. Sources say agri and dairy sectors will not be opened completely, but limited access is likely. India and the US all set to bolster defense partnership with a new 10-year framework, says the Pentagon. Defense Minister Rajnath Singh urges US counterpart Pete Hegseth to expedite delivery of engines to power the Tejas light combat aircraft. US and Vietnam agree on a trade deal, says President Trump. US agrees to reduce tariffs from 46% to 20% on Vietnamese goods. Vietnam will not impose any tariff on US goods. Global Trade Research Initiative calls the deal a cautionary lesson for India with strategic implications. As hundreds of Chinese technicians exit the Apple supply chain and electronics manufacturing units, government sources say companies must determine the best way to retain and manage talent. China has not announced any formal restriction, even as it tightens the tap on talent and tech. MarutiSuzuki asked the government to spare small cars from the new fuel efficiency rules, but most other car makers want the rules to stay. Sources say government is considering if small cars need separate rules. Delhi High Court restrains Yoga Guru Ramdev's Patanjali from airing disparaging advertisements against Dabur's Chyawanprash. Dabur's lawyer argued Patanjali made false claims that other manufacturers have no knowledge of Ayurvedic texts and formula used to prepare Chyawanprash. The CEO of Adani Airports declares the company is eliminating middlemen from the lounge business. This comes a day after airport service provider Dreamfolks accused two major airport operators of pressurizing its clients. The International Olympic Committee invites bids to broadcast the 2028 Los Angeles Olympics in the Indian Subcontinent before the 13th of August, with T20 cricket set to debut at the LA Games. IOC is expecting strong interest among broadcasters in the region. All right, let's start with the day's market action. Sensex and Nifty see marginal cuts and failed to hold on to the gains. That is the latest. While financial stocks dragged the markets, broader markets witnessed range-bound trade with the mid-caps outperforming the blue chips. So that is the market update for you. And the top story we are tracking this evening: India and the United States could sign an interim trade deal within the next 2 days. Sources have said the discussions are in the final stages. India is expected to offer limited access in certain areas like agriculture and dairy. Abhimanyu Sharma joins us with the details. Abhimanyu.
Government sources have told CNBC TV 18 that an interim trade deal between India and the United States may be signed within the next 2 days. Now, intense negotiations are continuing between both the sides, and negotiations are at their final stages. Speaking of demands, India is seeking more market access for its labor-intensive industries. On the other hand, the United States is seeking more access in the dairy and agriculture sector as far as exports of these products into India is concerned. However, government sources have assured that India's farmers' interests will not be compromised at any cost, and both these sectors, namely dairy and agriculture, cannot be opened up completely. It is likely, though, that several niche and premium products from the US may be allowed sale into India as part of an interim deal which is being negotiated. It remains to be seen how early the negotiations are going to conclude, even as both the sides look to seal an interim trade deal before the 9th of July. That is when the reciprocal tariffs are slated to kick in. Earlier this week, CNBC TV 18 had reported that in case talks fail, 26% tariffs would be imminent. So all eyes, of course, would be on the talks which are taking place currently in Washington, D.C. And based on that itself, any further steps would be initiated by both the sides.
The U.S. Chamber, the U.S.-India Business Council, all of our members want to see this deal happen. It's very important for the United States and India, the two greatest democracies on earth, to have such a deal. I understand the trade negotiators are in town and working away. Secretary Bessent said the other day that a deal with India is very, very close, and we are cheering wholeheartedly for this deal to happen. It is my sincere desire and hope that both negotiating teams will push on through, because the only people who will really be gleeful about this deal falling apart are, frankly, Beijing and Rawalpindi and others. We need to have this deal go through. It's important for optics. It's important for business confidence.
And speaking of India and the USA, Defense Minister Rajnath Singh and his American counterpart Pete Hegseth have agreed to sign a 10-year framework. This is in a bid to further bolster defense and strategic ties between the two countries. The statement was made by the Pentagon a day after Defense Minister Rajnath Singh held a phone call with Pete Hegseth. Minister Rajnath Singh urged his US counterpart to expedite delivery of engines to power the Tejas light combat aircraft. Now, Vietnamese stock markets hit its highest level in 3 years after US President Donald Trump announced a trade deal. US will impose a 20% tariff on Vietnamese goods, while Vietnam will not impose any tariff on American products. Under the deal, transshipments from other countries through Vietnam will still face a 40% levy. More details are still awaited on the contours of the deal. CNBC's Jay Pyong has the details.
6 days before the Trump administration's tariff reprieve expires, Vietnam clinches a trade deal with the United States. Though details are still scant, proposed tariffs on Vietnamese exports to the U.S. will go down from a proposed 46% to just 20%. It's a less severe blow on the fast-growing Southeast Asian country that counts on exports as a major economic driver, with 30% of these going to the United States. There is a catch, though, with the U.S. keeping a 40% tariff on Vietnamese goods that have been transshipped through the country from other places such as China. This was made to try and prevent other nations from using Vietnam as a backdoor from which to sell goods to the U.S. in an effort to avoid possible tariffs on their exports. In return, U.S. President Donald Trump claims that U.S. companies will get to sell American goods to Vietnam with zero tariffs and lower barriers. The clock is ticking for Asian countries like India and Japan to clinch a trade deal with the world's largest economy. However, the Vietnam-U.S. deal may provide a possible scenario or framework for other nations that are trying to get better terms and less punitive measures from Washington, D.C.
Now, Vietnam's dependency on U.S. for exports is extremely high. Vietnamese exports to the U.S. have nearly tripled since 2018, while U.S. exports to Vietnam have grown just 30%. Vietnam exported goods worth a record $136 billion with the U.S. last year. The Global Trade Research Initiative said that the trade deal between the US and Vietnam serves as a cautionary tale for India. The Global Trade Watchdog said, and I quote, "For Indian exporters eyeing Vietnam as a competitor and a partner in regional value chains, the deal presents both a cautionary lesson and strategic implications," end quote. Now, US President Donald Trump's mega budget bill is headed for a final vote in the US House of Representatives. The budget bill, which is crucial to President Trump's agenda and includes many promises on tax cuts, the U.S. House of Representatives is debating the bill on the floor before its final passage. President Trump had earlier pushed for signing the bill into law by the 4th of July, which is the day America celebrates its Independence Day. As hundreds of Chinese technicians exit the Apple supply chain and electronics manufacturing units, government sources say companies must determine the best way to retain and manage talent. China has not announced any formal restriction, even as it tightens the tap on talent and tech. Ashmit Kumar joins us now with the details. Ashmit, what are your sources telling you?
Well, just yesterday we had reported how there's a movement of Chinese employees back to their home country, and that is inspiring a great deal of concern within the electronics industry. Now, we reached out to very highly placed government officials. What they tell us is that, yes, the government is seized of this issue. This is not news to them. They have been hearing about it for the last couple of months. They point out that there is no formal restriction as such that has been brought in by Beijing. So there's not much room to maneuver from a diplomatic standpoint. And then going on to say, sources telling us that this is, at the end of the day, an issue between a private company and between the relationship that it has with its employees. So this is an issue of talent retention, talent management. That is something that the companies themselves will have to do. But having said that, the government sources also telling us that there are multiple options available. There are possibilities of sourcing talent from geographies such as Taiwan, which again has a very strong ecosystem of electronics industry. Also going on to say that if asked, if requested by the industry, the government would be open to working with with the industry to ensuring that there is localization of talent, there is training and grooming here within Indian borders that will meet the needs of the Indian industry. But that, of course, will be a mid to long-term project. For now, the short-term concern is that these number of Chinese officials, Chinese employees who are working for companies such as Foxconn for that matter, hires hundreds of these Chinese employees, a lot of them who have moved back. That has led to a great deal of concerns. These employees were working in sensitive areas of operations, production, training, quality. The fear is that perhaps going forward, in the near term at least, it might have a bearing as far as production is concerned, especially at a time when India was looking to boost the production, augment the local production of devices such as Apple products. So clearly a short-term concern. The government saying that it sees of the matter, open to working with the industry to find solutions, but broadly saying that this is, at the end of the day, an issue between a company, and that relationship has to be maintained by the company with its employees. Back to you.
Right. Thank you, Ashwin, for that update. Moving on, HDFC Bank CEO Shashidhar Jagdishan has approached the Supreme Court seeking to quash the FIR filed by the Leelavati Medical Trust. As reports, senior advocate Mukul Rohatgi has sought urgent listing of the matter in the apex court. The Supreme Court has agreed to list the case tomorrow. This comes just days after 3 judges from the Bombay High Court recused themselves from hearing the petition filed by the HDFC Bank CEO. The Delhi High Court has restricted Patanjali Ayurved from running degrading advertisements against Dabur's Chyawanprash. The High Court allowed an interim injunction on Dabur's plea, which alleged Patanjali's special Chyawanprash was disparaging Dabur Chyawanprash specifically. Now, shares of Tata Power decline in trade. This after the company was ordered to pay over $490 million in damages to Claros Capital following a partial award by an arbitral tribunal under the Singapore International Arbitration Centre. The arbitration was initiated by Claros in November 2020. Shares of Nykaa declined more than 4% after a large block deal. Over 2% stake changed hands today. Sources have said that the total transaction worth 1,200 crore rupees with a floor price set at 200 rupees a share. Sources have also said that early investors Harinder Pal Singh Banga and Indra Banga are the likely sellers. Now, e-commerce player Meesho has filed its IPO papers with SEBI via the confidential route. Sources say Meesho has selected investment bankers including JP Morgan and Morgan Stanley as advisors for the initial public offering. The SoftBank-backed platform plans to raise up to 4,250 crore rupees in primary capital through the IPO. Now, the company is eyeing a public listing around September to October this year. Now, MarutiSuzuki has asked the government to spare small cars from the new fuel efficiency rules. But most other car makers want the rules to stay. Now, sources say government is considering if small cars need separate rules. Parikshit Luthra joins us now with more. Parikshit, Motown is divided on the new fuel efficiency rules.
Well, yes, and Maruti is seeking a review because it's most impacted by these CAFE norms. 10 out of 17 cars of Maruti Suzuki are small cars. And this is the reason why they are requesting the government to review the corporate average fuel efficiency norms. The largest car maker in the country says the existing fuel efficiency regulations penalize lightweight cars and allow bigger cars to emit much more CO2. They have gone on to say that all countries have policy tools to protect small cars in their CAFE regulations, and India's current policy around fuel efficiency norms is counterintuitive. Maruti has said there is a need to protect small cars, keeping in mind per capita income in India. Sources say the current emission targets may force certain automakers to discontinue some models at a time when the industry is already in stress. And these are models of small cars. The matter has been discussed at the highest level. It's been discussed at meetings in the Ministry of Road Transport, the Power Ministry, the Ministry of Heavy Industries, the Ministry of Minister Nitin Gadkari also had a meeting with automotive CEOs, and this was one of the issues discussed. The industry is, however, divided. While Maruti Suzuki has sought review of CAFE norms, most car makers want earlier targets to stay. The government is considering whether separate CAFE norms for small cars under 1,000 kg is needed. The government is considering whether there should be separate fuel efficiency norms for both small and big car makers. Other OEMs, especially SUV makers, have opposed the proposal for lower CAFE targets for small cars, their argument being that small car sales are falling because of changes in customer preference, and there is no need to change the CO2 emission targets that were unanimously agreed upon by the industry in December 2024. All car makers have to meet emission targets as laid out in the government's fuel efficiency norms. The emissions of a company are calculated based on weighted average of annual sales, and there is a penalty for exceeding targets.
Thank you, Parishit, for that update. Moving on, the Delhi High Court has issued a notice in response to a plea challenging the Delhi government's order on the fuel ban. The petition stated that petrol pump owners are being penalized for refueling end-of-life vehicles. The High Court has sought the government's reply on delegating enforcement action and introducing these penalties. Well, it's time for a short break, but coming up next, the International Olympic Committee invites bids to broadcast the 2028 Los Angeles Olympics in the Indian Subcontinent before the 13th of August, with T20 cricket set to debut at the Games. IOC is expecting strong interest among broadcasters. More details when we return. Welcome back. The International Olympic Committee has invited bids to broadcast the 2028 Los Angeles Olympics in the Indian Subcontinent before the 13th of August, with T20 cricket set to debut at the LA Games. IOC is expecting strong interest among broadcasters in the region. Shireen Bhan spoke with the top IOC executive for more on the media rights.
We're bringing into the sports program, after more a century of absence, the sport that the Indian population cherishes the most, cricket. I think we're really here in a place where this is a game changer for India, but it's also a game changer for the Olympic movement. So this is a win-win situation, and whoever is going to be the partner that will be our partner for the future will create history. Will create history not only in India but also across the world.
What is the expectation in light of what you've seen with Paris 2024 and the numbers that we've just talked about, with the many milestones, the records that were achieved with Paris 2024, now with the inclusion of cricket? What's the expectation in terms of what the media rights value could possibly be? And also, has there been any conversation with Viacom 18? Have they expressed any interest in possible renewal?
It will be a question, who is the best bidder that best responds to the criteria that I outlined earlier. In terms of value, we expect I cannot disclose, of course, any value that are confidential information, but the expectation that the amount will be a multiple of that amount.
Any update on where things stand on India's aspiration of hosting the 2036 Games?
Well, we've heard numerous times, the interest expressed by India, through various, I would say, level of government authorities about an interest in hosting the Games in the future. We absolutely welcome this interest, and from a commercial standpoint, of course, this is great news for me. There's a process in place, and will I think all of us be following very, very carefully what that process leads to, and we absolutely welcome the interest of the Indian delegation here at Olympic House.
Right. The CEO of Adani Airports has declared that the company is eliminating middlemen from the lounge business. This comes a day after airport service provider Dreamfolks accused two major airport operators of pressurizing its clients. Shares of Dreamfolks continue to remain under pressure on back of the development. My colleague Madiha Mujawar joins us now with more details. Madiha, please take us through what Adani Airports has said so far.
So Adani Airports CEO Arun Bansal has spoken about the airport's lounge business in a LinkedIn post. He said that passengers across India can now access lounges directly through Adani Airports platform in partnership with other lounge operators. He said this has been made possible by the innovation coming out of the group's in-house digital lab. Bansal said that the fintech revolution has eliminated the need for middlemen across sectors. In this case, he's referring to lounge access providers like Dreamfolks. He went on to say that in today's tech-led world, only companies willing to disrupt themselves will survive, the rest will disappear. Remember, this comes a day after Dreamfolks told CNBC TV18 that it is being pressured by two large airport operators to exit the lounge business. They claim there's a coordinated campaign to damage their reputation and push them out of the market. For context, Dreamfolks is a lounge access aggregator. It offers lounge access not just at airports, but also at railway stations, highways, and even visa centers. Just to add some more context for our viewers, here's how the lounge ecosystem operates. The airport operator awards the lounge contract or runs it directly. The lounge operator manages day-to-day services. This could also be the airport operator itself. The access provider, like Dreamfolks, connects passengers to lounges via partnerships. There are payment gateways like Visa, MasterCard, and RuPay that enable transactions. And finally, banks and credit card issuers tie up with access providers like Dreamfolks to offer free entry to customers. So when Arun Bansal talks about eliminating middlemen, this means doing away with the lounge access providers like Dreamfolks. So in airport, where Adani is the airport operator, lounge operator, it will also be the lounge access provider. That's what we've picked up from Arun Bansal's LinkedIn post.
All right. Thank you, Madiha, for that comprehensive update. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.